What the people ask for is some deep substance here. And so actually the number one issue, and I don't think it was that close in terms of the voting.
Well, it was like, so the top two were basically tied.
Oh, the top two. Okay, so number one issue that you guys asked for us to talk about is something that we've covered a number of times on the show, but it's housing. And it's particularly relevant this week because, of course, we just got a sort of stunningly bad inflation report. And a significant part of that had to do with shelter costs. That's both home prices and rent. Both parts of that obviously incredibly significant because so much of people's paycheck goes to shelter. And also because really the only way to get ahead and have sort of the stable classic American dream in this country is to become a homeowner. And that's the way that we've set things up. The fact that asset prices go up much, much more quickly than wages do. Wages are actually, falling behind, especially with inflation, means that this is incredibly central to inequality, culture, society, the fabric of the nation, all of those things. So here's some latest stats to kind of get us kickstarted. We're looking at a Bloomberg article. The headline is Rent Inflation Shows That Landlords Have the Upper Hand Again, pointing to massive spikes across the country. It started in sort of the cities that people were fleeing to, the Sunbelt cities. That's where rent spikes started, but now it's become a nationwide trend. They also say right at the beginning of the pandemic, you see this radical shift where the average rental cost in a city, if it's higher than the U.S. median rent, people mass exited that city. And if it's lower, people were mass entering that city. The places with the highest inflation right now are the ones that saw really significant demand shocks from changes in migration trends. So you're having now this sort of national increase in rent prices that are hitting people absolutely everywhere. Right here in New York City, and this is from a New York Times article, you had prices spike a third in a single year.
Yep. Wow.
So from January 2021 to January 2022, prices went up by a third. So you had a lot of people who thought, oh my God, I can finally afford to actually live in Manhattan or actually live in the neighborhood that I wanted to. They got in during the pandemic, helped support those landlords who were going through tough times. And then when the renewal came up the next year, they're completely priced down. They don't have a prayer. And the other piece here is that home prices are also skyrocketing, not just because we've had a continued inflation of an asset bubble, but also because now with the Fed raising interest rates, that means that mortgage rates are going up. That makes home prices even less affordable for people, especially first-time home buyers that don't have it all in hand in cash to put down or who can't get it from mommy and daddy. Well, what does that mean? That means those people, instead of being able to buy a house, are going to have to rent. And that, again, increases the rent prices. The last trend that we've tracked, of course, closely is the fact that in some of these markets, it's like a third to a quarter of the buyers are not regular people. It's permanent capital. It's massive influxes of these gigantic companies that want to become America's landlord and to change the American dream from you own your own home till we'll rent you the home with the white picket fence.
Yeah, let me just zoom in on one of the most important stats here, which is that the monthly mortgage payment that it takes to buy a typical home in the United States is now up by 55% compared from the start of last year.
Jesus.
Just the monthly mortgage payment.
Yeah.
Now, this is actually something that, Krystal, you've been really focused on, which is when the Federal Reserve raising its interest rates and throwing kind of a change in all of the interest rates also that all of us are experiencing, is that we have had the sharpest rise in mortgage interest rates in modern American history. Just in the last 2 months, rates have gone up from 3 to 5%. You compound that over the lifetime of a 30-year mortgage, that's potentially hundreds of thousands of dollars, if not tens of thousands of dollars in the average home market. Same thing in terms of New York City. My own sister lives here in New York. Marshall, I'm sure you're hearing from a lot of friends. Like the COVID price got so many people into living situations, and given that work from home and all that has actually remained static, a lot of people are now going to have to bite a major bullet and potentially have to see a 50 or 60% increase in rent here in the city, even though their commiserate salary and all that, frankly, faced with inflation, has gone down relative to what they're able to pay.
Yeah, I think the part that I want to pick up on you're discussing is the depressing narrative part of this, right? So like COVID, I shouldn't have to say this, insert is one of the worst things that's happened in all of our lifetimes, obviously.
Yeah.
But especially in the summer, once the lockdowns ended, you had this story of, hey, COVID has now helped everyone realize that in a lot of professions, you don't have to actually go into an office and you don't actually have to live in New York. And we could have this bountiful future where maybe you want to live in Tulsa, maybe you want to live in South Carolina. Like you could have this place where it's not as if, if the American dream of you buying like a nice house in Long Island is probably gone. But guess what? The good news is the internet has made it so that you could basically live anywhere.
If you're a white collar.
Yeah. And this is the thing.
Big if.
But here's the key thing. Even that white collar story hasn't played out. Like that's like what's actually like really fascinating to me, which is that
right.
Only the uber richer.
What I actually recently heard is that more people have moved to New York now than actually were moving to New York before COVID. So what you're really seeing there is that what you saw, what people wanted to have happen is that the internet would like disperse, decentralize, like weaken the power of these big cities, DC, New York, LA. It didn't happen. And so I think it's an important story, even if you're like not a white collar person, because I'm not trying to claim a sob story about like Google employees. It's more just that I think there are so many instances like this of us not being critical and making, like how many books were written the past 2 or 3 years claiming that this wouldn't happen. Like how many takes were there that like, no worries, guys, like all this is basically solved now.
If I pick up on that, and this is fascinating before I go to you, Kyle, which is that people were like, oh, well, people will leave New York and people will go and they'll go to Boise, which happened. Rent inflation in Boise is up like 50%. Well, here's what happened. Now rent is high here and in Boise.
Right.
Now rent is high here and in Austin. Rent is high here and in Dallas. Rent is high here and in Tampa. Well, that's some of the places that there. So instead of what's happened is you've had the rich folks here who have had a massive increase in their price of their home. Also, the people who have the money are relatively fleeing, driving up the price in other cities. But it's priced out. Basically, anybody who makes this less than what, $350,000 a year, that's like 96% of the U.S. population.
The average home price, the average is now $500,000.
Right.
Yeah, that's insane.
Fucking crazy.
So one of the things, I remember there was an article maybe about a year ago that came out and explained how one of the things that's happening is like BlackRock and some other Wall Street ghouls are going around buying up all the houses and then just renting them back to people.
Yes.
Correct? So in a way, we sort of reinflated the bubble just through a different path, the 2008 bubble that burst. I look at that and I say, are we going to avoid it bursting again? Is it not going to burst because it's BlackRock who owns it and is renting it out to everybody, or is it still going to burst? And the other fact that sticks out in my mind is that one of the reasons why you've had this push from the government to get people back into the office is because the commercial real estate bubble was going to burst if people didn't go back to the office.
Yeah.
So there's sort of like a nefarious motive along those lines as well.
Yeah, that's definitely the case. Not to mention bosses just like want your ass in a chair where they can like watch your every move,
control
even if you were perfectly productive on your own time. Yeah, I mean, this is also a generational story because we already have the stats to know that millennials are hitting every financial milestone later than boomers and older generations did. So they're, getting married later, they're starting families later, and they're owning homes later. And this is, I've come to realize that this really is central to sort of class dynamics in the country, perhaps even more so than wages and your work status, because the way that the economy works is if you are an asset owner, everything is basically set up for you. I mean, this is a very powerful constituency. Homeowners are a very powerful constituency. That's why the logic of the market has been home prices going up and up and up and up, because this is a powerful constituency that benefits from that policy. So you are never going to be able to really get on the rung of that sort of stable middle-class life where you have a nest egg and you have something you can pass forward to your children if you're not able to get into the housing market. I mean, this is how middle-class wealth is built in this country. And increasingly, to Marshall's point, even the white-collar worker, two-income white-collar workers in expensive cities can't do it unless they have mommy and daddy's help. And this is, this isn't just anecdotal. These are what the statistics bear out, is that increasingly first-time buyers have to get that massive lump sum payment from mom and dad. And so it also hardens intergenerational wealth divides as well, where if your parents were able to buy in and do well and able to help you out, then you are set up to be part of that class that makes it. And it just exacerbates these massive divides in this country. And that has obviously massive implications in terms of racial wealth disparities as well. And all of these things become incredibly important. So the sort of asset owning, non-asset owning divide in the country has become almost more central than anything else.
So what I'm wondering though is, I think we did a great job like setting up like the state of affairs. Like what actually does one do now? Because to your point, Kyle, like thinking of, okay, there was this huge housing market crash in the 2000s. The history here is complicated and like it's a little more than just like the Big Short story. But part of the story there is that a huge priority for the Bush administration very explicitly was, hey, like let's increase home ownership. And there's a conversation about how like the way they ended up doing that ended up benefiting Wall Street and all these disasters.
Of course, yeah.
But there was this actual startership of like Bush framed it as like, you want the ownership society. This was going to be, and this was part of their broad like privatizing Social Security pitch. So like I'm not saying like this is a good thing, but like we saw an attempt. So like what would be y'all's version of how should we make this better then?
On that, it's a good point. And really what it is that we loosened the regs 2003 onward and made it almost too laissez-faire, both for the people who are borrowing, but worse also for the commoditization of that, and then did nothing about it. So the problem, and I think, is that we've actually gone too far in the other direction, which is that now we've put all of these onerous regulation on the banks. So what you just noted, Krystal, about the average home price is officially over $500,000. Well, that means that 50% of Americans now don't just have to qualify for a mortgage, they have to qualify for a jumbo mortgage, which actually the banks themselves have much more strict regulations in terms of who they're going to loan to, which makes you even more disproportionately likely in order to need your parents and their credit score in order to sign on for your mortgage application. Limits the amount of the pool of people. So what I would say is that from the Federal Reserve, and this is a complicated story too, but on their front, they need to focus continually on the second part of their mandate, which is full employment. And when you focus on full employment and not just on interest rates as the only like sledgehammer that you have, then we're talking about wages. And that has to be the number one focus of the administration. Also, I would note, I mean, this is a policy show more so than the current news, but there's a reason that Joe Biden has a 26% approval rating amongst young people.
That's right.
And like this is part of it.
I mean,
young people are like, hey, I cannot win in the current society.
My solution, to the extent I have any, which I'm not sure I do, but I think why not go back to the same regulations that when they were in place, we had a generation of stability and economic security for the country, what's generally called the golden age of economic expansion. And so, like, for example, the fact that when the crash hit in 2008, immediately in the aftermath of that, they didn't just put back in Glass-Steagall, and that was viewed as like too extreme to go back to Glass-Steagall. Well, that arguably the separation of commercial banking and investment banking was arguably one of the things that, kept the economy safe and functioning in a relatively safe way. So, I mean, I would just look to the past and the New Deal regulations, and whatever worked in the past, you need to implement now. And then whatever new issues arise, you have to come up with intelligent regulations.
You've got to attack this thing at every level. Because as we started off talking, the fact that people can't afford a home puts pressure on the rental market, and then, makes it difficult to afford even a rental home, and then contributes to the massive exploding issue of homelessness that every single city in the country and small town, frankly. I mean, I see people who are homeless in my little tiny town in King George County in Fredericksburg, Virginia, that I never saw before in my entire life. So you have to start at every level. You have to have a massive influx of affordable housing. You have to have a radical rethink of homeless policy and move in the direction of housing first and getting people the services that they need on top of that, so that you expand the pool in terms of the rental market. Obviously, right now, there's also a housing supply shortage because of the supply chain. So dealing with that is another important part of the problem. I would be perfectly comfortable with laws that personally ban BlackRock and those people from buying up entire neighborhoods. But if people don't want to go that far, you could certainly have regs in place that privilege individual homeowners who get the first crack at the house. And it's basically like, if there's no one who will come in at the market price, as an individual homeowner, then maybe we could consider a BlackRock bid or some other permanent capital, larger financial institution. I think that would make a big difference, especially in some of these Sunbelt cities where you've got 20, 30% of the home purchases, single-family home purchases, are not from individual homeowners. The other piece I think you have to deal with is that lump sum payment. I mean, how many stories have we read about people who, they're like, okay, listen, it's tough, but I can do the $500,000 house. Mm-hmm. But I don't have $500,000 literally sitting in my bank account in cash to put down. So the government programs we have in place right now in terms of mortgages are all set up to help people to get the mortgage, to be able to make the payment. We have to have programs in place to help people get that lump sum payment down who can't get it from mommy and dad.
Or at least
that just goes to wages, though, no? Doesn't that? That's what I would say.
Well, that's part of it, too, for sure.
I'll give a quick anecdote that speaks to this. So, I'm renting. I got a great pandemic deal, and I've discovered, and because once again, this is what's so toxic. I did not realize that at 30, I could buy a home. So I haven't thought, but I just started thinking about this, addicted to Zillow. I can make mortgage payments, relative to what was spent. I live in Williamsburg, New York. COVID, rent deals are over. I could easily get a mortgage. But guess what? I don't have that lump sum payment.
Right.
So that is what it's, and it's kind of and that's the insane part. I just want to add one thing on this too, sorry, because Krystal, I'm glad you talked about Fredericksburg, because I think we've been focused really on a national scale politics thing, but the local thing, the story you're telling about affordable housing, the story you're telling about new construction, that's actually very local and very state-based.
Yes.
So I know that you and I disagree a bit on the YIMBY-NIMBY thing. So. And there's complications there. So, for example, I understand why a local community would say, hey, we don't want to wake up one day and all of a sudden there's all these huge giant condos next to us in order to qualify as affordable housing. So this is a key task for local state politicians, which is how do we balance, hey, communities should decide what they want to look like with, hey, actually there's this generational crisis.
Yeah.
And what I don't think is happening right now is you have politicians who are worried about, hey, we don't want to have old homeowners get worried about their community changing. They are not thinking about, hey, let's balance that with the fact that people like us, frankly, who are privileged in our own way, people who aren't even us, don't even factor in it at all. I don't think there are basically any governors who are thinking.
No, they're not.
Yeah, I think that's exactly right.
Yeah. And I mean, look, if you leave it up to the communities, I mean, I feel like nobody cares about homelessness enough to actually do a housing first policy because there's no money in that. And it's, you're doing something that's almost purely altruistic in a sense. If you do housing first and then add rehabilitation.
It can also increase the value of your house.
What's that?
Coming from LA, look, if they cleaned up Skid Row, that would dramatically increase the value of all the property.
But cleans up means what? Does it mean criminalize them, crack down on them, throw them in
the cage?
That's a great question. And that's why it is what it is in terms of the status quo. Because it's easier to do
It's cheaper to just criminalize, clean up, do what Eric Adams is doing in New York than it is to actually have a housing first policy, which is complicated and difficult and expensive.
I would say just to put a cap on it, banking regs is a huge part of this because what you're getting to, and Krystal, you alluded to this, I have heard so many stories of people who have 10% down, but then they get outbid by somebody who has the entire thing in cash.
Right.
So really what it is that there are certain regs, which already have this in place in terms of the way that neighborhoods and others are allowed to discriminate, is you have to make it so that the banks themselves cannot discriminate, quote unquote, against that, as long as you're good for it whenever it comes to the mortgage loan itself.
I think you got
which would level the playing
I think you got to
field.
privilege regular,
even privilege it.
regular people over permanent capital and there's a big cultural issue here as well because you end up with a more transient population. Already we have communities that are just completely sort of rootless and degraded and people feeling adrift. And I do think that's part of sort of the core rot and degradation of the country. So cable news is ripping us apart, dividing the country, making it impossible to function as a society and making it impossible to know just what is true and what is false. But the good news is they are failing and they know it.
That is why we're building something new, a new mainstream, a healthier one, something more trustworthy, something that we are going to need in one of the most pivotal times in American history. We are building up here for the midterms, for the upcoming presidential election, but we need your help. So if you can help us out by becoming a premium member today at breakingpoints.com, we're trying to change America for the better and the entire world.
So what are you waiting for, guys? Go to breakingpoints.com and sign up and help us build a new mainstream.